Hey, what's going on, guys? My name is Richard Moglen, and welcome to another Stock Market Outlook video. This past week, the QQQ and SPY dropped 11% and 10% respectively, erasing a lot of the gains of the previous 3 months. And although this type of correction is unusual, especially given how quickly it occurred, it's not unheard of. And this is why it's so important to have a method to determine the health of the overall market and what the current trend is. And then you should also have a set of trading rules that determine how you trade based on that market health. So in this video, what I'm going to be doing is kind of outlining my process, and I'll be giving you my trading rules that change how I trade based on that market health. So in my process, I first take a look at the IBD Big Picture article from the previous Friday. Then I take a look at some psychological indicators like the put-call ratio, and then I actually go to the indexes themselves and analyze them for potential weakness or strength. So in this video, we'll be going through that entire process, as I said, and let's first take a look at the most current IBD Big Picture article. So the title of this one is Stock Correction Continues, but a few signs of a low emerge. So if you weren't paying attention at all this past week, this sentence right here basically sums everything up. What a terrible week, and that's definitely the case. As I said previously, the S&P 500 dropped 11%, the NASDAQ 10%, and this was the worst week since October 2008. However, as they said in the title, there are a few signs of a potential rally. The first is that the NASDAQ found support at its 200-day moving average and had a very good Friday. It recovered completely after a big gap down and actually closed above the close of the previous day. They talk about how you can use the put-call ratio right here to determine potentially a technical bounce. However, obviously that's not perfect, and we'll actually talk about that in just a second. But overall, they recommend that investors and traders wait for that follow-through day signal. And the follow-through day is a very important concept. And again, I'll talk about that a little bit more in depth in just a second. But it's very important that you wait for the signal before taking up new trades, because you don't really know whether the bounce next week, if it happens, is going to hold, or it bounces a little bit and then slides just as strongly as it did this previous week. And they talk about how this is an unusual stock market correction. And they talk about how a few individual stocks are finding support. But overall, the current outlook is a market in correction, and there are very few stocks acting well at this time. So let's get started with the put-call ratio right here. And this is basically a sentiment indicator that takes into account the number of puts and number of calls. And the method is that if it's greater than 1.2, we're likely near a low, or at least a short-term low. And if it's near this 0.6 level, then we're potentially near a top. I found that it works a lot better on this side right here, identifying a low, because a market can be very overbought for a long period of time. And so over here in this area near this 0.6 level doesn't necessarily mean that a top is forming. You can see that it actually was highest all the way back in December, and we rallied for another 2 months after that point. So right now we're very, very high on this put call ratio, 1.26. And as I said, the 1.2 level is kind of what I've been taught is critical. So does this mean that a bounce is going to happen? Maybe. But as I said, you don't know if that bounce is actually going to occur or even if it will hold. So that is the put call ratio. And the second important thing is this follow through day concept. So this was developed by William O'Neill, obviously the founder of IBD, and this was used to identify an important change in general market direction from a definite downtrend to a new uptrend. So after a major correction like this one, this is extremely important. So these fall through days can happen on day 4 or later of a new rally. And the new rally is when a low is formed and isn't broken consistently. So for a fall through day to happen, there has to be a 1% increase on above average volume in one of the major indexes. And these fall through days can happen on day 4 or later of the potential rally. So to help explain this, let's take a look at the QQQ in December 2018 and January 2019. So you might notice that after the drop in 2018, you had 2 actually failed follow through days. The first one occurs right here, and you can see here the low is formed. It rallies for at least 4 days. Here's the follow through day on an increase of 3% and greater volume than the previous session, but that actually fails. And this occurs one more time. You've got a intermediate low here formed, and then a follow through day here that keeps going for a few days, but then once again you fall dramatically until the actual follow through day and low occur. So this method isn't perfect, but it's the best way of getting in close to the lows with minimized risk. So that is the concept of a follow through day, and that is what I'm going to wait for before I take up any new positions. And this is outlined in my rules right here, and we'll go over that in just a second. But first, I want to cover the GMI Signal from wishingwealthball.com. You can see that the GMI score is a 1 out of 6, which is pretty bad. And you can see that actually Dr. Wish talks about transferring his university pension accounts from mutual funds to money markets. So that's how serious he's taking this coronavirus correction. He also talks about how he's holding a little bit of these inverse ETFs, the SQQQ, and then of course the Ultra GLD, which should do well in a correction. And you can see right here how clearly this basically vertical violations right here, erasing all these gains from the previous 3 months. So that is the Wishing Wealth blog kind of most recent blog post, and the current GMI signal is red since February 26. So now let's talk about the overall indexes and how they're doing. And there were some signals early last week of this potential market correction, and I was actually stopped out of most of my individual investments on this past Friday, which saved me a lot of money, definitely. And I was stopped out of the rest of my shares on this Monday. So last week we had 2 distribution days in a row on Thursday and Friday, and these were big red flags for me, especially given how much volume was being traded on those days and how the leaders were acting. So that continued next week with 2 even bigger distribution days, and that really got me worried about the market and put me on the sidelines completely, not looking for any more long positions. But overall, this past Monday, we dropped 3% on Monday, and then a further almost 3% on that Tuesday, with a close much lower than the open of that day. Then you kind of had a kind of stall day here where the market rallied a little bit, but didn't really do that much at all. And then you had another big drop of 5% on this past Thursday until we reached this Friday, where we did rally slightly on the NASDAQ and the SPY. So on this day, it gapped down a lot, but it was a positive that we actually closed above the close of the previous day. And this is actually a bounce off the lower Bollinger Band here, which is identified by this blue dot down here. And will this rally hold? Who knows? But it is day 1 of the new potential market rally because the close was greater than the close of the previous day. And it is comforting to see all this volume coming in here. That is what you want to see on the start of a new rally. So that is the QQQ, and taking a look at the GMMA chart, you can see that we're no longer in a red, white, blue pattern, and we're potentially forming a blue, white, red pattern. So taking a look at the SPY, you'll see even a weaker chart here with all the red EMAs below all the blue and the blue curling down. Definitely not what you want to see if you are bullish at this time. And you can see that we're close to the levels in August through October. Taking a look at the normal chart, you can see once again that we're actually doing a lot weaker than the QQQ because we're all the way near the lows of this previous consolidation. And taking a look at the IWM, you can see that once again we're below or almost at the lows of this previous consolidations. And the IWM is probably the weakest chart out here, which isn't a positive sign. And you can see that on this Friday, while the QQQ did rally all the way, the IWM wasn't even close. And you basically had another distribution day on the IWM. So the last index that I like to look at to kind of gauge market health is the FFTY. So this indicates basically how growth stocks were performing at this time. And you can see a lot of distribution here and a rally on this past Friday, but still closed below that previous close. So not a good picture from the FFTY. And taking a look at the GMMA charts, we're once again in a blue, white, red pattern here with all the red EMAs below all the blue and the blue ones turning down. So overall, the trend right now is down, and it's going to stay that way until this red, white, blue pattern reemerges and there is that follow through day. So how does this translate to my rules, and how am I treating this in terms of looking for new positions? So going over to my trading plan, it starts with the most important thing, which is the assessment of general market trend. And basically I have two sections. The first is how I determine an uptrend, and the second is how I determine a downtrend. So overall, I say that the market trend is the most important indicator of whether stocks will go up or go down, and thus it's the most important factor in deciding how to trade. And don't swim against the current. It's so much harder to trade against the trend because 3 out of 4 stocks do what the overall market is doing. So overall, I determine that the market is in an uptrend if any of the following are true. The GMI signal is green. The IBD market pulse uses the word uptrend in its current outlook section. The QQQ daily GMMA chart is in a red, white, blue pattern, or after a follow through day, the current close is above all the QQQ daily GMMA red EMAs. And if the market is trending upward, I look for long positions or ETFs. Now, if the market is trending downward, which I identify by either the GMI signal is red, the IBD market pulse is in a downtrend or correction, or the QQQ is in a blue, white, red pattern. If that is the case, I look to sell stock short or invest in inverse ETFs like the SQQQ. So that is my overall assessment of the general market trend. And right now, based on these rules, the market is in a downtrend. So what am I doing while the overall market is in a correction and I'm just on the sidelines and in cash? Well, basically what I'm doing is looking for stocks that are actually doing well in this bad market, because those stocks are exhibiting high RS or relative strength. And the theory being is that these stocks, once the overall market turns around, will do the best and will potentially be the new true market leaders. So stocks like ZM that are up in a down market, those are the kind of stocks that I'm looking for at this time. And I've got a couple different processes that I'm using to do this in TC2000 and also in Marketsmith. And I plan to actually make an entire video about that process and the couple different ways to find these high RS stocks. So look forward to that. But other than that, I'm on the sidelines. I'm watching closely. I'm updating my trading rules. I'm learning. I'm watching webinars, all those different stuff that will help me once the overall market turns around. So I highly suggest you guys have your own set of trading rules just like this. I think it's so important to have a written down, and I emphasize written down, set of rules that govern how you trade. It doesn't matter if you follow them every single time with every single trade, but it is important that if you don't follow them, you write down what happened if you broke a rule. And then you can always update them given new information and new experiences. But it's very important that you have this baseline, you have this set of trading rules that you use to keep your system as uniform as possible. And I do plan on doing a series that kind of goes through all the rest of my rules right here. I think that'd be very helpful to kind of explain my process to you guys. So if you'd like to see that, make sure you leave a like on this video and also comment down below that you would be interested in a series like that. So that is it for the video, guys. Thanks so much for watching. Please remember to leave a like down below. It really helps out the channel. And if you're not subscribed yet, please remember to hit that red subscribe button down below. It's completely free. But other than that, have a great weekend, guys, and I'll see you all in future videos.